Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving dividends the past 30 years. Their Wall Street analysis feel that it has 40% upside. And corporate insiders bought shares in the last 3 months. So if you want to take a look at this company, sit back, enjoy, do me a favor and hit that like button. If you're not yet a subscriber, hopefully by the end of this video, you will subscribe. It really does mean a lot to me. Also remember that this is not financial advice. This is just me sharing. With that said, let's take a look at this company. So the company I'm talking about is Thor Industries. The ticker symbol is THO. This is a company that engages in the manufacturing and sales of recreational vehicles, mostly RVs. So they have like towables, RVs, motorized, and all other stuff. So if you look at their website, you can get a little bit more information on the type of vehicles that they provide. Now, if we swing over to some of the presentation, you can see they are manufacturing operations in 5 countries, mostly in France, Germany, Italy, United Kingdom, and the United States. So they distribute about 25 plus countries. And then this is the net graphic, and then here is your North America, and these are some of the other companies, motorized. And then if you look at the industry, the RV industry, you can see some of the graphs, like the industry wholesale units, traveler trailers have been like 71%. And then you can look at the calendar year right here, RV retail shares, from 2021 to 2022. And then you got your towable ones from 2021 and 2022. Now, if you look at some of the overview for the RV industry, you can see from 1990 all the way down to 2022. You can see from the 5-year car from 2016 to 2021, 6%. And then you got your towable ones, you can see right here, 7%. Motorized one from 2016 to 2021, 0.5. And then you got all these other. If you look over here, North America and Europe, comparison of new vehicle registration by continent, you can see North America has higher than the Europe one. Now let's take a quick look at tip ranks based on their price target is in the high of 100, 42% upside. At the time of this video, it is at 70. Analysis rating is moderate buy based on own just one. And then you got average of target and lowest is 1. Now if we look at a little bit more stock analysis, you can see smart scores outperform. You can see hedge fund holdings have increased. Insider bought shares. So if we look a little bit more to the insider trading, you can see insider confidence is positive. And then right here, corporate insiders bought shares worth in the last 3 months. Then if we look down to the hedge funds, you can see they have increased their shares as well right here. So you can see the trend, so it's a positive. Now let's take a look at Simply Safe Dividend based on their dividend safety score. They're rated as safe, which is 65. The dividend yield is 2.45, and then it's a mid cap at almost 4 billion. Looking at the key metrics, you can see payout ratio is 9, which is low for automakers. Forward payout ratio is 15. During the recession, they have maintained it. Their dividend, and you can see from the dividend growth the last 20 years, 25%, which is fast. Last 5 years, 6%, and then you got your 4.9% in October of 2021. So if you invested on this company 20 years ago, you have made a substantial amount of profits. You can see from the graph, you can see it kind of went stagnant here, and then now it's slowly going up. 30 years without a reduction, 11 years consecutive increases. Payout details you can see quarterly in the months of January, April, July, and November. And then you get your annual payout of $1.72 per share, which you break it down to about 43 cents. And then if you look over here, the dividend yield is a little bit higher than the 5-year average. A little bit more down the line, you can see some of the graphs in here from the total sales, outstanding shares, return on investment capital. You can see last 12 months 26%, return on equity 35%. Now if we swing to Yahoo Finance, so if you look at the 52-week range, the low is 62, and then you got your high of 128. Forward dividend yield again is 1.72, and then if you look at the 5-year growth, you can see right here. So, and then the performance outlook is bearish. Now if we look down to the earnings, you can see 4 beats the past quarters, but look at this one right here for the annual, the revenue from 2020 to 2021. That graph just went high from 8 billion in revenue to 12 billion in revenue. So it's been kind of steady the past from 2018 to 2020, and then from 2020 to 2021 just skyrocketed. Now if we go to, again, looking at Yahoo Finance, the top institutional holdings, you can see Vanguard has about this amount of shares, and you got BlackRock, and then you got State Street Corporations and all these other companies. Now if we swing to NASDAQ, based on their analysis rating, they rate it as a hold, and it's 11. And then these are the firms that made the recommendation. Citibank, you got KeyBank, Jefferies and Company. Moving along to Seeking Alpha. So what I want to look at is the 10-year one. As you can see from the 10-year, it's up 105%. And then for the 5 years, it's down negative 40. Now if we swing to bar chart, if you ever had a chance to read this article, there's an article by Zach, a company, and then I don't want to butcher this person's name, but they wrote about the 4 dividend payment construction stocks for a stable portfolio, and Thor is one of the ones that they talked about right here. So if you get a chance, read it. It's just basically talking about the good things about Thor Industries. Now if we look at bar chart, it's pretty much similar. The high of 100, the mean of 82, and then the low of 60. And then you got your analysis rating, which is similar to the rest of hold. Yeah. And then looking down, you got 3 strong holds, 3 strong sell, 1 strong buy, and then 6 hold. Now let's take a look at Stock Rover. So in Stock Rover, it is also a consensus of hold. It's a mixture of 6 holds, 3 strong sell, and then 1 strong buy. So you can see the average price is what do you call that right here in the 70. So 82, it's this the average. Now if we look at simply Wall Street based on share price and fair value, they rated as 91. Currently it's at 70. They consider it 22% undervalued. Some of the positives of this company: trailing 22% below our estimate, earnings grew 98%, and then you got all these other ones. Yeah, and then your risks: earnings to forecast to decline, average of stuff in the next 2 years. They have a high debt, unstable dividend track record. All right, that's it. What I take from that, it's a pretty solid company. I don't know if I want to invest in it. I think for me, I gotta look deeper into more of it. If I'm gonna invest in Thor Industries, it'll probably just a small amount, not necessarily one company that is my big time players in there. It's probably just gonna be a company that just for dividend play, but not in the long term. I think for me, it's just I need to learn more about the RV industry if I were going to invest on that one. But there are other companies that you can also take a look at. So check out some of the videos. There's pretty much great companies in here that you can kind of decide on what companies you want to invest on to complete your dividend portfolio. Thank you so much for watching, guys. Please be safe out there. Stay cool. Be safe. Keep investing, and I'll catch you guys in the next video. Right? Take care. Aloha.